pre-opens indicating that markets could see marginal gains coming in, just 0.1% higher on the benchmark indices is what we're seeing. So what's the strategy at this point? Manish Sonthalia from Motilal Oswal Financial Services joining in. Manish, morning, and thanks for taking the time out to talk to us. What's the sense as far as markets are concerned? Because clearly there's been a little bit of nervousness in the last couple of days that the markets have been experiencing. How do you see the outlook, at least in the near to the medium term?
I think, the correction has happened, and I remain positive on the markets. I don't really see the markets falling too much from the current levels. Maybe at worst, we could see something like 5,900 or thereabouts, but below that, I think, there could be compelling value in the market per se and on the headline numbers.
Manish, since the last couple of months, ever since we saw that huge rally coming towards the second half of 2013, it's all been on the hope of what kind of election outcome could pick up, what kind of election cues we could see going forward from here. What's the sense that you're picking up, looking at the levels that we are currently at? How much is being priced in, and how much of more upside is probably there in terms of what kind of outcome we could pick up from the elections?
Elections is one factor which is clearly there, and the recent opinion polls seem to suggest that the NDA-led government should have something like 200 to 205 odd seats. They're still away from 272 mark, but is higher than the erstwhile estimation of 180 to 190 seats. So clearly the optimism, one of the reasons for optimism in the Indian markets is the election outcome, and that we are seeing, post-tapering announcement, India has been one of the best performing markets within the emerging market space. I think more than that, it is the improved fiscal situation of the country vis-a-vis what we were facing in May to August last year. That has helped. The raising of FCNR-B deposits on a very timely basis, pre-tapering is giving a lot of comfort on the current account deficit, which is roughly anywhere between 1/3 to half of what the erstwhile projections were. When we started the new fiscal year 2013-14. I think combining all these factors in the backdrop of the result season which has played out so far.
Sure. Manish, just hold that thought. Just want to come and get the market opening. I'll come back to your point out there in terms of the outlook as far as why we've seen that of a bump up in terms of markets. Excuse me for that. Alright, markets have opened a tad bit higher. 20-21 points is what we're seeing right now. In terms of stocks that are on the radar, we're talking about the IT pack, which was in focus. Infi, TCS have all started the day off a little bit on the lower side. Wipro also down 0.2% is what we're seeing currently. Beyond that, BHE is down 4%. There have been all downgrades coming in post those numbers. We're just looking at the terminal and looking at kind of reports that analysts have actually come up with. There's not been a single upgrade whatsoever post those earnings. There's been tremendous pressure on BHE. Stock collapsed almost 1.5% yesterday. Today it's down 3.6% is what we're seeing on that counter. HUL and ITC though holding on pretty well. Maruti today is up almost 1% is what we see for that counter. You got Tata Steel also holding on pretty well, a 1% gain on that stock. Coal India, Cipla all trading higher by roughly around 0.5% odd or so. But it's BHEL that's taking the majority of the knock, 3.5%. Top loser clearly on the index. Tata Motors just seeing some marginal cuts today, 0.5% lower there. Let's pull out the Nifty and get a quick mention there as well as to what's happening on that index, which is trading high by around roughly 13 to 14 points. 13 stocks losing, 37 stocks gaining is what the ratio stands at. Now in terms of individual names, BHEL clearly top loser. Power Grid also came up with numbers, 1% cut on that stock. TCS, we've been reading into the kind of commentary that we picked up from Cognizant. That's sold in a little bit of caution in terms of guidance. IT counters are trading somewhat lower. HDFC, Sun Pharma, JSPL, Ranbaxy seeing a little bit of that run-up that we saw yesterday as well, continuing to trade today, 1% gain on that counter. So all in all, it's once again a flat start, but extremely stock specific, and a lot of them are pretty active on various reasons, maybe earnings, maybe the earnings impact coming in, or even on expectation like ACC, that's trading low by nearly 0.5%. So then that's the way markets have opened, 15 to 16 points higher on the Nifty so far.
In the mid-cap space, there is 0.5% of gain coming in, but take a look at Jet Airways. That stock is zooming ahead. CCI came out with its approval for the jet privilege deal with Etihad, so that's another overhang that is now out of the way for that deal, and the stock's reacting positively to that bit of news. We've also got Ranbaxy in focus. Yesterday the stock zoomed ahead after that management con call that took place. Today it's taking a bit of a breather, but still in the positive with almost 1% of gain coming in. So a couple of stocks that are on our radar. The telecom sector continues to be on our radar. Probably, of course, reacting to its numbers, some of which missed the estimates. And then you've got the telecom sector that continues to be in focus on the back of the telecom auctions. But let's get back to Manish. Manish, you were making a point about the market's outlook, especially in the light of the elections as well as the fiscal situation that we are in currently. Please finish your point.
Yeah, so I think these two factors are quite important, but what is also heartening is the fact that numbers so far has been more or less in line with estimates, barring the capital goods or the metal space, which in any case were not supposed to do good. But I think beginning of an investment cycle, lowering of inflation, interest rates might have peaked out, etc. These are all positive signs. So in spite of tapering announcement and hiccups along the way, I don't think the markets are headed down in a very significant way. If at all, we are headed slowly and gradually on the upside only.
Manish, if you're going to gradually head upwards then, specific sectors or even stocks that one must have while we see when we head towards that pre-election rally?
Yeah, so I think the favored sectors continue to remain the export-oriented sectors, the ITs, the pharmas, banks, telecom, and consumer. I think these are the 5 sectors which I would bet on for the full year fiscal 2014-15. And as opposed to many who believe that the capex cycle is underway, yes, order book position has bottomed out, but margin position has not yet bottomed out. So it's still about 6 to 9 months away as far as the capital goods space is concerned, and commodity related sectors should be actually avoided according to me. The super cycle in China is over, due to China is over, you seeing massive slowdown in China, etc. So commodity related sectors should in fact aid India's growth rather than the other way around. So I think these are the sectors that I would be positive on.
You mentioned about the telecom space, Manish, and that's really been in the news. I mean, we've been tracking the kind of auction result, or rather auction developments. We've been tracking the kind of interest that's been generated there, and the kind of the jump that we've seen in terms of the bidding prices as well. What's the sense that you're actually picking up right now as far as auctions are concerned, and how could this actually play out in terms of sector dynamics?
Yeah, so auction has been at the higher end of what was estimated previously. Due to heightened competition both in the 900 and 1800 megahertz the bids. But having said that, I think 2 or 3 things which one would watch out for is, one is consolidation. Tata Teleservices are already looking to exit telecom. The Tatas are in fact looking to exit telecom business is what we hear in the media. That is one positive point. And all these increased spectrum prices would result in an increase in RPMs. It was expected to happen in a prolonged way, but I think there is now an urgent need to up tariffs. Telcos have actually done away with the freebie minutes. I think what you could see in the days ahead is a discretionary uptick in tariffs, which will help the RPMs in a big way. And coupled with that, the data story is playing out in a good way. Valuations are quite comfortable. So I think this is one sector. In fact, if you hear the commentary of Tech Mahindra as well, discretionary spend on the telecom side is now actually moving up. The sequential growth in tech from the telecom vertical was 4.4%. So not only in India but on a global basis, I think telco is now in a sweet spot. It should move up. So I would think these are classic value plays for telcos, and I think in India the telecom sector has gone through its own set of problems. It's a fresh investment that one could look at.
Manish, what about the Auto Pack? Auto Expo is on, and series of product launches in the last couple of days, a lot more lined up. Now, while the industry growth outlook remains very muted, do you think any of these new products could change the fortunes of few of these auto companies for this year?
Yeah, so I would, it would be very fascinating to see how the U car plays out. That is one space to bet on. It's an upgraded version of the RE360, that is one. Or Hero MotoCorp Superbike, the 600cc bike which they are planning to launch. How is that going to play out? I think these would be two interesting things to watch out for, coupled with the fact that even Tata Motors automatic transmission on the Nano as well as the diesel version. How is that going to play out? These would be the 3 or 4 models that I would be excited about.
You're not enthused about what Maruti is set to launch today, the Celerio?
I don't think so. I mean, Celerio, okay, but it's a replacement of the erstwhile A-Star. They are going to replace Celerio with A-Star. So let's see how this whole thing plays out. But doesn't look that much exciting to me, at least.
Manish, the other interesting pack has been the metal space. I was discussing with our previous market guest as well earlier in the day as to what's really happening there, because it's predominantly been taking the kind of cue from the kind of data that we've been picking up from China itself. But Tata Steel the last couple of days, today also it's been holding on pretty well. Yesterday the stock had a good run. What's the strategy when we talk about the metals pack, and after that recent bit of correction, is it once again looking attractive?
I wouldn't think so. It would be very stocks and specific commodities that could be in the limelight. I think for the full year 2014, it could be your iron ore, which could be seeing seasonal upticks, so to speak, or let's say a copper, which could see a seasonal demand on the upside. Barring these two commodities, I'm not really too bullish about the entire commodity space, particularly so steel, in the backdrop of what's happening in China. You have seen an uptick in prices because of restocking before the Chinese Lunar Year. Natural gas could actually surprise very positively on the upside, and that is one space to watch out for, particularly in the backdrop of companies like Petronet or an IGL, etc. Or Reliance and ONGC. So I think I'm only bullish on natural gas or iron ore for the full 2014 calendar year. But other than that, it's all about China slowing down in a big way, and don't really see the demand supply dynamics working out favorably for any other commodity.
Manish, you earlier mentioned about the export-oriented sectors, and pharma has been in the focus. In fact, Bloomberg spoke with the Lupin also, and then very clearly saying that they're looking out to encash on the opportunity in the US markets on the back of what's happening to Ranbaxy and Wockhardt. Any interesting insights as far as some of these pharma companies are concerned?
I think Lupin is a brilliant play. I mean, the ANDA pipeline which they have built, 180 ANDAs plus various dosage forms would be a strategy to shift customers from one form of dosage to the other form, etc. And they're working out the US strategy, Japan strategy brilliantly, and they have superior chemistry skills. So whether it be a Sun Pharma, whether it be a Dr. Reddy's, or whether it be a Lupin, each would have their own first to file opportunities. They have their own back end and the front end. So the normalized guidance of around 20 to 25% growth over the next 3 to 5 years looks very feasible. Only question is, what is the price you're paying today? So if you talk about a Lupin, it may be 28-30 times current year earnings. Whether there is value at current prices, I mean, if you are a long-term investor, yes, there is a value. Short-term, there could be a correction. Plus, a lot of opportunities are there in the mid-cap space as well, particularly those who are creating the US business. We have kind of portfolios, they have created the US business which they were not earlier present in. So the US business is now up and running. So 40 crores this year, 125 odd crores top line next year. A lot of API, back end, front end, all in place. So these are some of the opportunities I would think.
Fair enough, Manish. Thanks so much for joining in this morning and getting us your sense in terms of the market outlook and the strategy as far as a couple of sectors and stocks are concerned. All right, but in terms of markets, there's marginal gains coming in, 0.3% higher is what we're seeing right now. The currency, though, pretty stable at 62.4.
A lot of bad stuff, and let's see how things pan out. It's a wrap on First Risk for now. Coming up next is In Business with Harsha Subramaniam.
Thank you for watching.
First Trades, presented by BSC, Investors Protection Fund.